This is not financial nor professional advice. This video is for entertainment only. Hey everyone. Well, I think the bubble has popped. The market is crashing, at least the way it looks on this Friday, April 22nd. And I think it's going to continue. And I think this could be the big one that we've been waiting for. I think the Dow could go below 30,000. The S&P most assuredly seems to be headed for 3,800. And the NASDAQ could touch 10,000. So this is a big one. The reason I think this is I've tried to be nimble and moved into the value sector and metals, which it seemed to be doing. But it seems there's a number of factors. Like with metals, Alcoa aluminum would be a good example. They are starting to have supply chain problems because of the war in Ukraine. And so they took a big hit one day. And that stock seemed headed for the moon. And the steel companies have started to get hit. And I did not like the way the market was moving. And so on Wednesday, I got out of stocks. But I did go into the 20-year bond, okay, the inverse fund on the 20-year plus bond. And the symbol for that is TMV, and it's a triple leveraged inverse fund on the 20-year bond. And for every dollar that the 20-year bond goes down, you go up $3. And that's been working out, and that's been going up, which has made me very happy. It also made me very happy that I got out of the metals. I tried gold from different perspectives and different trades, and nothing really worked. And that's because I think it's too soon. I think we have to get towards the bottom of the crash before gold starts taking off. And I was into inflation fighting stocks, but I think at the beginning of a major crash, you got to wait for the crash to complete or run out the first 50%, let's say, of the crash before getting back into inflation stocks like the basic materials, like mining stocks, before that will work. I still have that in mind, but not for now. For now, I'm going to do the 20-year bond, the inverse fund on the 20-year bond, TMZ. And I'm also going to start shorting the market. I will probably use BERZ, which is a triple leveraged inverse fund on the FANG stocks and on innovation, which sounds horrible, and it is. But during a crash, this is what's going to go down. It doesn't care about what we think. When you get a market crash like this, it has a mind of its own, and it's like trying to stand in front of a freight train. You're not going to stop the freight train. And so you can either step to the side and climb aboard, or you can get run over, which is what's going to happen. There's always my old friend, the SQQQ, and I've noticed Apple has started to go down. And Apple and Microsoft and NVIDIA and all these big tech companies starting to go down. They're all wonderful companies. I will be buying them in the future. There is no doubt. But I want to wait until there's some momentum. You can't overlook momentum. And it just breaks my heart to see some YouTubers insist on keep buying and buying and buying when they say it's dipping. It's not dipping, it's crashing. The evidence of that is there is no safe harbor. If there was some things that were benefiting, besides my short stocks and besides my shorting the bonds, if it was substantial stocks and some of them were benefit, that would be indication of a rotation, that the stock market's finding new winners. But the stock market isn't finding new winners. It's finding new ways to lose. And it's just depends on how much you want to lose if you want to stay in the stock market. So it said to me that I had to get out and start thinking about shorting and doing the inverse fund on the 20-year bond, which was also triple leverage. All these short things I'm doing, the SQQ, the BERZ, and the TMV, all of these are triple leverage inverse funds. But you have to be quick in a down market like this or you will get killed. And I've seen YouTubers, some of them very famous, lose like $1 million. I'm not letting that happen. There's a very famous YouTuber, he goes by Meet Kevin, Kevin Paffrath, and he got out of the market a couple months ago. And I remember everyone was like doing therapy with him, like this was such a sin that he got out of the market. He did the exact right thing, okay? And I think he's playing the 20-year bond too, and that's probably part of my inspiration. But I'm triple leveraging it. So I like the triple leverage because I like things to happen a little quicker. You know, and it seems like you can play around with it. At least I can. These triple leverage inverse things, they're sort of risky. Well, not sort of risky. They are risky. And so I recommend it for myself because I'm used to doing it. If you're new to the market and don't have experience with these types of things, you want to be very cautious about getting into it. And I probably don't recommend it. In fact, I don't recommend it because it's not recommendable because it's inherently risky, but it's the only thing you can do when a major crash is coming. And I've made far more money shorting the market this year than I've made investing in stocks. I've made like 200,000 in shorting the market, and I've lost maybe 20 or 30,000 on trying to pursue different avenues of stocks, hoping they'll go up. But I'm losing my faith in their going up, especially when Jerome Powell comes out and announces that they're going to be increasing the interest rate by 0.50 points at a time. That's 0.5%. Each time they meet, and they meet next on May 4th and May 5th. So we're headed for a high interest rates. Already the mortgages on houses are like at 5%, and that's sure to have a big effect on the real estate market. So the signs are not good, and I'm going to do these three triple leveraged inverse funds. And it's stressful and it moves faster and you got to be nimble and quick when you're doing it. And I'm used to doing this. And it's like a meditation when I get in that state of doing this. And I don't like doing it, but it's the only way to ride out a crash and make money that I've found. If you have better ideas of how to do this, you can tell me. But I can't believe the YouTubers that keep going on about how they just invest, and see no end to the going down of the market, and they just continue to do it. My advice to them, if this is my advice to myself, is if I see the market keep it going down, let it go down. Okay, when I want to invest is when the market stops going down and makes momentum towards starting to go up. It doesn't make sense to do it the other way unless you want to wait 2, 3, 4, 5 years. And I'm not waiting 2, 3, 4, 5 years. Basically, what they're trying to do by insisting on buying stocks is they're fighting the Fed. The Fed has declared war on inflation. The market will crash, at least somewhat. The economy probably will go into recession. They might be able to sidestep it, but it doesn't look like it now. It looks like things are going to slow down a lot. And it could be more than a recession. It could be a great recession like we experienced in 2008. Although I think we're in a little better shape now than we were then, so I don't think it'll be quite as bad. But I think you got to prepare for times like this, and you don't prepare for times like this by buying speculative stocks. I've talked about some inflation fighting stocks. They will go down less, but even with those, I'm not buying those right now, and I've sold those simply because they're not likely to go up, at least right now. They're likely to go down less. They will fight inflation, but they won't beat the Fed. Trying to beat the Fed is like trying to beat a boxer who's heavier and stronger and just bigger than you. You're not going to win. You're going to get clobbered time and again by punch after punch. You're going to receive an uppercut, and then you're going to receive a haymaker, like a 0.5% interest increase, and it's going to knock you out. And it could knock you out for good if you risk everything. So I'm being cautious. I'm being careful. I'm being nimble and quick, and that's what you have to do in my world, and that is what I am doing. It is not financial advice. A crash is a very hard thing to get through. I've lived through many major crashes, okay, more crashes than I care to remember, but I learned something each time, and this is what I've learned for now. At this point in my life, I am playing it quick and nimble, and you get out of the way of a freight train, and I see a freight train coming. Especially what put the final nail in the coffin was I invested in Tesla shortly before the earnings came out this last quarter, and the market, responded positively, at first, but not very positively. It never went above 1,100 and basically went back down to around 1,000 by Friday. These were excellent earnings. These were stellar earnings. That stock should have gone up to 1,300. And what that said to me is it doesn't matter what stock you are. The market is insisting on going down, and they are reacting to the Federal Reserve and to Powell increasing interest rates, and they can see the freight train coming towards us, and they're just standing out of the way. And that's what I'm doing, and I wish you the best of luck, and I hope this isn't as dire as I think it could be. I think it's going to be a crash that we're going to take notice of. I hope it's not a second Great Recession. Okay, so I hope to be in a better mood the next time I present. But I'm going to probably be under significant stress because shorting is always stressful, just because if the market does go down the way I think it could, it tends to be very quick, and you got to move, and you got to move quickly. So thanks for watching the video. Be sure to like and subscribe so that you can see how this turns out. Okay, I'm interested myself to see how this is going to turn out. It's an unknown mystery. We never know what's going to happen in the future simply because it hasn't happened yet, right? Okay, so good luck, thank you, and I will see you in the future.